Hey guys, welcome to today's trade breakdown. Did not take any trades yesterday because prediction was just horrible. Today, I think it was also not really easy, but we are now trading at all-time highs, and I was just able to take this bang along in here, continuation trade with a 5-minute condition also after 10 a.m. So we also saw basically 10 a.m. Manipulation to the downside. Just perfect. Before we talk about execution, as always, I want to talk about today's condition. Daily chart, all-time highs, nothing special. Our hourly chart also all-time high. So every I don't know time frame is basically bullish. There's no way we want to look for shorts in such bullish market conditions. So as you can see right here, also in the 50-minute chart. Since the opening, only trading higher. We scrapped already daily buy-sell liquidity. Asia, London, and New York Open kill zone traded only higher. We did no damage to the sell liquidity, but we don't need to see that always. So as you can see right here, that's the more important term right here. I think that already changed. So before we saw a wick to the downside. Now we don't have one. I don't know why today's a bit trading view is a bit laggy, or I don't know how to call it, but some wicks disappear and some volume imbalances as well. Still, I think we had a wick to downside right here. Already scrapped basically pre-market says liquidity. Even if we did not had the sweep right here, we would not look for longs just because every time frame is bullish and we don't want to short all-time highs. That's just the simple rule. So right here we are only trading slowly higher with AM, but there's nothing we really want to take. So for us to take a continuation trade, we need to see a basically a short-term run on stops, a says liquidity sweep preferred after 10 a.m. Why? Because 10 a.m. is likely to manipulate lower if we expected our 10 a.m. candle, hourly candle, will still expand higher. We need to see a wick to the downside. So what I mean by that is the wick right here. That's our 10 a.m. manipulation to the downside. And that's basically what we saw right here. So that's what we want to see. With that, basically, we traded back into the 5-minute fair value gap right here. That's the volume fair value gap I marked out right here. We scrapped size liquidity, we scrapped engineered size liquidity, we created SMT, and that's perfect. We've also got this huge down close candle right here. To me, that's manipulation to the downside, because right here we created the SMT. That's really important. To me, that's like, as I mentioned before, manipulation, but also like a really important PDRA. I don't know really how to frame it in the right words, but because we are reacting of the bearish fair value gap right here, this candle, this order block needs to fail. We need to close above CE and from there on trade higher. That's really important if we want to see that the low right here is the low of the retracement, that the SMT right here stays intact. And therefore, once we close above CE, I want to go long. I was a bit patient. I regarded the candle right here. If you're going to dump lower, or if we are just holding above CE and we were able to trade higher, entered right here. So we need to move this one candle to the left. Place my stop below the SMT. That's where we want to have it, because we still can trade into the 5-minute gap. We don't want to see that we take out the SMT. That's really important. That should be our swing low in that case. And from there on, we aim for external buy-side liquidity. We are in trading conditions. We want to expect that we reach that. Therefore, I aim for the SMT low in that case, because I was just playing safe in that case. Also got filled a bit higher right here and basically closed my position, or I think I got stopped right here after trading my stop really tight, because ES was looking really bearish to that moment. So I'm really content with the trade stop in that case. So now back to now let's take a look on regular trading hours chart. That's really important to me. And as you already see right here, yesterday, really horrible price action. No new open range gap and just completely consolidating. Right here, we expanded lower, but nothing to trade in here. But what we see is that we traded into the new open range gap right here from Thursday actually, what is quite interesting. Wait, maybe let's see how many. Yeah, 43 handles, so that's a permissible gap in that case. Quite clean to see that we trade back into this. And to me, because we scrapped now basically trend and liquidity right here, we are in a market maker buy model. Also because we are trading at all-time highs. Yeah, you could say we already reached extra buy liquidity with trading even higher right here. But still, that's a only up day, as you can see right here. Only to expect that we would trade back to the upper quadrant would mean for electronic trading hours that we would trade even below the 930 low and lower. And that's just way too optimistic for being or for having a bearish bias. And that's really important to understand. So many times I try to take any shorts in here, to force any shorts back to the, I don't know, New York open kill zone, size liquidity, back to the upper quadrant level of our new open range gap. But that's just on those days we are trading at all-time highs, where every time frame is bullish. We cannot look for shorts. That's just really important to understand, and therefore I'm really content with taking the long in here. Maybe also, like, let's take a once more look on the hourly chart, because right here I think also the market maker buy model is really clear to see. So yesterday we had this huge wick to the downside, so therefore yesterday was really difficult, but because we were staying inside the new week opening gap, we were trading higher. But definitely this is right here unfinished business. So I really like that yesterday we traded, came down once more, scrapped the excess liquidity right here, and therefore our market maker buy model is in play right here. Yeah, once again we swapped external buy liquidity, but we are trading at all-time highs. We don't want to predict the top. That's really important. We don't want to predict the top. Therefore, we are still looking for longs. And that's, yeah, the perfect trade I took today. I think I explained everything now. Maybe once more I look on ES. So that's ES, and was really not looking bullish in here. Trade lower. Therefore, yeah, I'm content with trading my stop tight. And that's basically it. So hope you enjoyed the breakdown. Hope you learned something new. That's exactly how I want to approach basically, yeah, really trending conditions at all-time highs, where we have no opening range gap quadrants to rely on, where we expect that we are only going to trade higher. So perfectly well done. That's how I want to trade on a live account. That's how I want to trade on evaluation accounts. Yeah, so really good trading day. I know what to look for. I just have to be really patient and stick to the basics, and we will get there, definitely. So really important day today. Hope you enjoyed the breakdown, and see you soon.